All right. All right. What up, YouTube? It's your boy Dion back with another video. Just wanted to do another, I might be a little too close to the mic. I just want to do another quick update video to talk a little bit about my trading this week and, my plans moving forward. Um, so still on my evaluation. I have maybe a couple weeks or so. I'm still in one of those evaluations with the Fivers. They have a time limit, so there's no unlimited time. The thing about the evaluation is, like, um, if you get timed out, and you're in profit, you can just pay to go. You can jump right back into the same evaluation, just with an extended period. But it would have to make sense, if you don't hit your profit target ahead of time. A couple times I've been close and just try to throw a Hail Mary, and that didn't work out. And then a couple times I've made it the full time, but I was in drawdown, so obviously I'm not gonna spend money just to start in a negative position. So still in my like I just mentioned, I'm in drawdown right now. So um, what I've done basically is just lowered my risk. So um, what I have been doing is sort of been sticking to is $100 risk per day or per position, and depending on what kind of setup. And so right now I'm just more like at a 50 to $75 risk position. So I would just lower my risk so that I'm not um, putting myself closer towards blowing the account. Again, the valuation that I'm on right now, I have an 1800 profit target, which doesn't seem particularly difficult with a $20,000 funded account or evaluation demo account, whatever. But there is just some things that are really tight within the trading rules. One of the things that has been especially challenging for me is I trade small cap stocks, like micros, stocks, like stuff that between $1 to $5, maybe even $10, but nothing really really extreme. And I do have the ability to trade stocks with outside or above $10, but they're just not as volatile. And then also a lot of the setups and strategies that I've learned um, apply to small cap stocks. Um, so the challenge with that is, if you're trading a stock that's a couple dollars or less than a dollar, they're super volatile, and at times, you know, um, they just don't have a 10-cent move. And the trading evaluation that I'm on, that's one of the rules, is a minimum profit target of 10 cents per position. So if you buy, let's say you take a position at 50 cents, 50 cent company, and it let's say it goes up to a dollar. That's 100% gain on the day. But let's say they don't have a total 50-cent move on the day. Let's just say they only move 8 or 9 cents, or part of the time I'm in the position, it's up maybe 20%, but it's only 5 to 6 cents. A couple times in the evaluation, not just this one, but many other blown challenges before, like I've been green on a position and I've kept it open because I was waiting for my trade to exceed that 10-cent minimum per position or per trade, uh, per share. Sorry, I'm confusing you. 10 cents per share, in order for it to be considered a qualifying trade. So if I buy something at a dollar and it goes to $1.08, I can close the position, but that 8 cents won't be counted towards my profits in the evaluation. Only a minimum of 10 cents per share. So that's been a bit of a hang up with scalping trades. If I'm working with something or trading stocks that are, I think I hear my son over there getting a little crazy. I may have to call him in. Um, so if I'm trading something that exceeds $10, $20 or whatever, it's easy to get a 10 cent per per share move, but with the micro caps, small caps, it's kind of challenging. So that's one of the things that's kind of held me back a bit is I'm not able to scout certain trades. So I can look at a chart and kind of see where I think the trade may go or whatever, but I'm not able to take any position because sometimes it just doesn't work out because it's not enough, I guess, meat on the bone for me to actually take the trade. So that's been kind of tough. And then scalping also does not work in this particular evaluation because, well, I guess it does, but often, like, I'm in a trade, but you have to hold the trade for a minimum of 60 seconds. So it doesn't necessarily seem like a challenging thing, but sometimes when you see some of these super volatile stocks, they make really quick moves, and sometimes you want to get in and get out and just take a quick scalp. But if it's inside of that 60 seconds, it's invalid trade. So it's little rules here that I trade in my live account successfully. I'm able to take a large size in a like a micro cap or a small cap company, and scalp it and get out and make 5, 6, 7 cents a share, and that money spends. It's not like in the evaluation. So there's little things that I'm learning to try to get better at, and if I'm being honest, it's actually made me a bit of a better trader to be so selective in taking some of these positions, because with the minimum of 10 cents, it weeds out a lot of stocks. So oftentimes, at least in the evaluation, I see trades and I'm like, well, I kind of see where support and resistance lies. I feel like right now will be a good time to buy, but because it doesn't meet all those requirements, I just may miss out or skip the trade because I don't want to use up one of my 1 or 2 day trades, because I have been sticking to, for the most part, 1 to 2 trades a day, 2 winners or 2 losers, but really just trying to cap it. I taken it. And these are rules that I've adopted, but if I have a break-even trade, I'll take an additional 3rd trade. But I really feel like that is one thing, in addition to journaling, is reducing the amount of trades that I take. Has really helped me out with my control over the markets and dealing with like FOMO and greed and all those other things. It makes me be more selective about the type of entries that I'm taking. It makes me more selective about the stocks that I even trade, and it just makes me be a bit more patient. I don't want to just jump into a trade because I'm really not averaging down. I want to make sure that I'm taking the best entry possible, and just letting that be good enough. I've been in a bad way in the past where like I've averaged down on trades where I think that it's going to keep collapsing or it's near the bottom, and I'm trying to trade a reversal, and it just never bounces, and I ended up cutting for a much larger loss because I took on way too much risk, too much exposure. So that, and then also that has helped me out, and then also another thing I feel like that has helped me out a lot is just taking days off of the market. I'm almost to the point where I am comfortable with missing a whole day off the market. I'm able to focus more on what I need to do throughout the day, and so my mind isn't like kind of torn, trying to find a great trade and get it in and out and make money, or at least maybe not even make money. I think that's the wrong approach. I'm trying to get myself out of the mindset of going to the charts to make money. Right now, I'm just really trying to develop good winning trading habits and just kind of build there. So, but being a bit more selective and taking days off of the market has really helped me out. Like, I feel myself changing, which is a good thing. I feel myself changing whenever I'm making trades, and not to say I can't revert backwards, or that this is something that I just have mastered. I think trading like a lot of other practices, like dentistry is a practice, doctors practice medicine. I think trading is a practice. The same with like meditation. They don't call it, like it's a practice. It's something that you continually do, and your skill set evolves. So I see trading as a practice, not something that I will ever per se master, but something that I just kind of get better with through practicing it. But I would say, I've gotten really good at just missing trades and taking time off the market and not dealing with this whole FOMO. Like I'm just missing out on money and missing out on opportunity with the market. Whether you trade the stock market or futures or forex, or whatever type of currencies, crypto. Um, there is just an unlimited amount of opportunity available right now. So that's kind of where I've been trying to change my mindset, less about the individual day, and just trying to wrap my mind around this longevity mindset when it comes to financial independence, a longevity mindset when it comes to trading. And, I'm here for the long haul. So I'm looking to build a skill that I can take, you know, to the grave, and that I can show my family and friends is somewhere, something where I can travel anywhere and be anywhere in the world and get online and be able to find opportunity within these markets. So I feel like I'm rambling. That's really all I got. I just wanted to update you that today I stuck to my rules. I had some winning trades. Yesterday, I stuck to my rules and had a couple losing trades. But what's different is I've really been focused on playing better defense and making sure that my losers are a lot smaller than my wins. And the last thing I will say that's been a really big help for me is and I knew that it would help, and it's helping. And if you're having any issues with FOMO, or having a couple winning trades and then going back into the market and end up giving back the money that you made on the day, the biggest tip that I would give you, and a reminder to my future self as well, if you're struggling with over trading, just have a rule where you don't cheat on. And it's once you close your position, once you're done with the market for the day, close out the apps, close your laptop, get away from the computer, go find something else to do, so that you don't even become tempted to jump back in the market and really donate your money. Because oftentimes when you get back in the market, a lot of times it's impulsive. You're taking trades where there's no real plan. You're just kind of jumping in there, and you just open up yourself to more risk, and you're exposing your account, whether it's funded or live money, you're exposing your account to more risk. And so consistently profitable traders don't do that. I've read a lot of books, and I'm still learning from on YouTube from other consistently profitable traders and folks that have more experience than I have. And that's the one thing that I hear often is the traders that are consistently profitable, the ones that don't open themselves up to unneeded risk or overexposure. So me being done with the market, whether I have a losing day or winning day, just closing down, basically shutting everything down and going about my business is really helpful. Because in the past, I would have winning trades. I have 500 winner days, or 1,000 winner days, or even $5,000 days, and I would jump back in and end up finish the day red by over trading and just going on tilt. So by just shutting everything down, it's given me a total amount of freedom and made me much better in that regard. So that's it. Like I said, I feel like I'm rambling, but hopefully I shared some value, gave you some good ideas or some tips. And again, this is my documentation of my journey to become a six-figure funded trader. And I'm not gonna quit. I'm gonna keep digging and grinding so I can get it out the mud. And hope you are having a great day. I hope you're sticking to your rules, and like and subscribe, do all of that. And if you have any questions or comments, throw them down below. I love to kind of have a little community and kind of engage with some other traders on YouTube. So I appreciate you watching. Have a good one. Peace.